What if you could invest in Bitcoin without actually buying the cryptocurrency? Enter Bitcoin ETFs. Bitcoin exchange-traded funds, or Bitcoin ETFs, are a new and exciting development in the world of finance. They represent a bridge between traditional markets and the innovative world of cryptocurrencies. Bitcoin ETFs are appealing to a broad range of investors. Institutions with their vast wealth and risk management requirements can now gain exposure to Bitcoin's price movements without the complexities of direct investment. Retail investors who may be less tech-savvy or simply prefer the familiar structure of an ETF can also participate in the potential upsides of Bitcoin's price without needing to understand blockchain technology or manage digital wallets. The key advantage of Bitcoin ETFs is this ability to invest in Bitcoin's price movements without direct investment in the digital asset. It's like betting on the outcome of a football game without actually playing in the game. This opens the door to the world of cryptocurrencies for a much wider audience. Bitcoin ETFs provide a safer and more regulated way to invest in the volatile world of cryptocurrencies. The Securities and Exchange Commission, or SEC, has recently approved several filings for spot Bitcoin ETFs. This marks a significant shift in the regulatory landscape for Bitcoin and other cryptocurrencies. But let's take a step back and understand the journey to this point. The SEC's approval process for Bitcoin ETFs has been anything but smooth. For years, the Commission has been grappling with the decision, resulting in numerous delays and rejections. This has been a major roadblock for companies like BlackRock, Fidelity, and Grayscale, who have been eager to launch their Bitcoin ETFs. A key turning point came with a court ruling that challenged the SEC's stance on Bitcoin ETFs. The court found that the Commission's previous rejection of Grayscale's Bitcoin Trust was arbitrary and capricious. This ruling was a significant blow to the SEC's position and marked a change in the tide for Bitcoin ETFs. Now let's talk about what this approval means. Essentially, Bitcoin ETFs will allow both institutional and retail investors to gain exposure to Bitcoin's price movements without directly investing in the digital asset itself. This is a big deal because it provides a more accessible way for people to invest in Bitcoin. But it's not just about making Bitcoin more accessible. The approval of Bitcoin ETFs also legitimizes the asset in the eyes of many investors and financial institutions. It sends a signal that Bitcoin has matured as an asset class and is ready for mainstream adoption. However, this decision has not been without controversy. SEC Commissioner Caroline Crenshaw expressed concerns about the safety of the Bitcoin spot market, dissenting from the approval. These concerns will likely continue to be a topic of debate as Bitcoin ETFs begin trading. The approval of Bitcoin ETFs by the SEC is a landmark decision that will allow for broader access to Bitcoin. It's a significant step forward for the cryptocurrency industry and is likely to have far-reaching implications. As the dust settles, it will be fascinating to see how this decision shapes the future of Bitcoin and the broader cryptocurrency market. With the green light from the SEC, several companies are now vying for a piece of the Bitcoin ETF pie. Among the contenders are the financial behemoths BlackRock, Fidelity, and Grayscale. All have been eagerly waiting on the sidelines to enter the Bitcoin ETF arena. These entities aren't new to the world of finance, but their foray into the realm of cryptocurrency represents a significant shift in the traditional investment landscape. BlackRock, the world's largest asset manager, is known for its diverse portfolio and now aims to add Bitcoin ETFs to its roster. Their interest in this emerging asset class is a testament to Bitcoin's growing acceptance in the mainstream financial world. Fidelity, another titan in the finance industry, has also thrown its hat into the ring. Known for its customer-centric approach, the firm is hoping to leverage its reputation to attract both institutional and retail investors to its Bitcoin ETF offering. Meanwhile, Grayscale, a pioneer in digital currency investment, has been at the forefront of the Bitcoin ETF push. Their relentless pursuit has played a significant role in the recent approval of Bitcoin ETFs by the SEC. In anticipation of this fierce competition, these companies have been strategic in their approach, announcing and adjusting their fees to make their Bitcoin ETF offerings more attractive. This competitive fee structure is designed to lure investors who are looking to gain exposure to Bitcoin's price movements without the need to directly invest in the digital asset. This scramble for market share is a clear indication of the perceived potential of Bitcoin ETFs. It's a testament to the evolving dynamics of the investment world, where cryptocurrency is rapidly becoming a mainstay. Yet, amidst the excitement, it's crucial to remember that every investment carries inherent risks. Investors must remain vigilant, thoughtful, and informed. The race is on to attract investors to these newly approved Bitcoin ETFs. However, not everyone is on board with the approval of Bitcoin ETFs. Indeed, the acceptance of Bitcoin ETFs has not been met with unanimous applause. There are some notable voices of dissent, one of them being the SEC Commissioner Caroline Crenshaw. She expressed her concerns about the safety of the Bitcoin spot market, raising questions that are worth considering. The Bitcoin spot market, where transactions are settled on the spot, with immediate delivery, is a complex and volatile environment. It is often subject to significant price swings, and it remains largely unregulated. This lack of oversight and the inherent volatility of the market could potentially pose risks to investors. Even though Bitcoin ETFs offer a way for investors to gain exposure to Bitcoin without directly investing in it, it's important to remember that these ETFs are still tied to the performance of Bitcoin in the spot market. So if the Bitcoin spot market experiences a significant downturn, the value of the Bitcoin ETFs could be negatively impacted as well. Moreover, the approval of Bitcoin ETFs could also lead to an increase in market speculation. As more retail and institutional investors gain access to Bitcoin through these ETFs, the demand for Bitcoin could increase, potentially driving up its price. While this could be beneficial in the short term, it could also lead to a price bubble and subsequent crash, similar to what has happened in the past with other speculative assets. There are also concerns about the potential for market manipulation in the Bitcoin spot market, which could impact the price of Bitcoin ETFs. Given the decentralized and largely unregulated nature of the Bitcoin market, it could be susceptible to manipulative practices such as pump and dump schemes. While the approval of Bitcoin ETFs is a significant step forward, it also brings new challenges and risks that investors need to be aware of. The approval of Bitcoin ETFs marks a new chapter in the story of cryptocurrency. It's a step forward that could have far-reaching implications, not just for Bitcoin, but for the entire crypto landscape. It's about legitimizing cryptocurrencies in the eyes of institutional and retail investors alike. Imagine a future where Bitcoin and other cryptocurrencies are as common as stocks and bonds in investment portfolios. A future where the volatility of the crypto market is offset by the stability of other assets, and vice versa. This approval could potentially pave the way for that future, fostering greater acceptance and mainstream adoption of cryptocurrencies. However, like any financial innovation, it's not without its risks. The concerns expressed by SEC Commissioner Caroline Crenshaw remind us that we must tread cautiously, ensuring the safety of the Bitcoin spot market and protecting the interests of investors. So let's watch this space closely. As the story of Bitcoin ETFs unfolds, it has the potential to reshape the world of investing. Stay tuned to this space as we continue to follow the evolution of Bitcoin ETFs and their impact on the world of investing.